It's time for the Trading Stocks Made Easy podcast. Each week, Trading Stocks Made Easy demystifies stock trading and investing so you can profit big. And now, here's the host of Trading Stocks Made Easy, the wealthy investor, Tyrone Jackson.
Hey everybody, it's Tyrone Jackson, the wealthy investor, and welcome back to another episode of Trading Stocks Made Easy. I don't want to waste any time. Let's get right to it. The state of the market. In other words, what are some of the good stocks that I would recommend right now? And what are the companies that I recommend that you stay away from? Now, the number one company I recommend that you stay away from right now is Apple. And I know that that's weird and people are going to write and post on social media about, Tyrone, why would you say that? But that's fine. But I am here to make you as much money as possible. And I have a saying, don't buy the stock if you don't understand the story. So let's talk about some of the stocks that did really well that I really like and people are writing in and asking questions about. First of all, you know, most of the stocks that we trade in and invest in the Wealthy Investor Program are members of the Dow Jones Industrial Average, those top 30 stocks, or the S&P 500, which of course includes the Dow Jones Industrial Average, right? Let me also remind you of something that I've been wanting to say. I have no problem with anybody who fancies themselves a stock analyst on YouTube. I have no problem with that at all. But I want you to know, as an educated investor, those guys who are on YouTube, and I'm on YouTube too, for the experts that are under 35 years old, they are traders. And trading has nothing to do with wealth. For example, if I introduced you to a simple volatility trade where you're going to buy shares on, let's say, a Monday and sell them using good till cancel orders in your account on Tuesday or Wednesday, that is what we call a fast money trade. Why? If I buy 1,000 shares on Monday and I'm out of those shares on Tuesday, because the software kicked me out of that trade, I make $1,000. If I do that twice a week, automated trading, I'm making $2,000 a week, $8,000 a month. Now, believe me, there's nothing wrong with $8,000 a month in additional profits. It's not always going to be consistent because some stocks are volatile, then they shut off, and then all of a sudden the market has an interest in them again. And we know that algorithms trade at least 78% of all stocks these days. It's not human beings, it's software programs, okay? Now, that trade that will generate you $2,000 a week or $8,000 a month is not wealth. It is income. Okay. So let's talk about that just quickly. Short-term trades or flips, almost like flipping a house, right? They are taxed at the highest level. Stocks that you hold on to for 2, 3, 5 years, they pay long-term capital gains, which is lower. So what a lot of people get excited about is, hey, Tyrone, you could teach me a trade that makes $8,000 a month? Yes, but you're paying the highest tax rate on your capital gains, so you're not keeping all that profit, and you're not really getting wealthier. What I love about the Wealthy Investor Program, which is why I created it, by the way, is the Wealthy Investor Program is a unique blend of trading and wealth building. In other words, we're going to mix fast money trading with stocks and options, take those profits and buy shares of reputable companies for the long term. You see, in the Wealthy Investor Program, we actually have a plan for our profits, not just get excited about how quickly you can make money, because most people who fall in love with the speed of trading are really greedy at heart. They're trying to get rich quick. Again, there's nothing wrong with fast money trades. I love them, right? But if those fast money profits are not invested for the long term, you will always be a short-term trader making money, but on the search for the next fast money trade. Compare and contrast that with building wealth oh, I'm going to hold some shares for 2, 3, 4, 5 years and really let them appreciate so that 5 years from now, I'm in a totally different place financially because now I'm making enough residual income from my overall portfolio so that I'm pulling in $10, $15, $20, $30,000 a month guaranteed because I've upped my game to cover call writing. Do you see the difference? Again, I'm not upset with the guys on YouTube who are under 35 years old. But if you're over 35 years old, you're probably looking for financial security as it relates to your assets. And that's what I love about this program and why many of my students are over 35 and why I help them take their $500,000, turn it into $1 million, $1 million to turn it into $2 million so that they permanently have financial security instead of flipping stocks all the time. If you look at it in terms of real estate, there are people who flip houses, right? But they're always looking for the next deal to buy, fix up, and sell. There are people who hold real estate for 2, 3, 4, 5, maybe even 10 years. And when they sell that 1 or 2 houses, they have financial freedom. So my goal is to help you become an excellent trader, turn those profits into financial freedom so you can stop trading time for dollars. And I talk about time for dollars constantly on this show because some people are kind of hooked on this idea of short-term profits. I'm hooked on the idea of long-term wealth. I'd like to help you create financial freedom so if you wanted to, you'd never have to work again, or most of your income comes from the fact that you've taken a couple of years and you've actually built up a portfolio. Okay? So I always say your wealth is in your thinking. It's in your beliefs about what is possible. Some people just love the idea that they're making so much money from short-term trades, they never look at the long term. Here's what we know, that the long term is where the power is where the financial freedom is. So as you're buying stocks in the stock market, are there stocks that you're willing to hold for a 2 to 5 year period? I hope the answer is yes, because that's the formula that's going to create financial freedom for you. So the stocks that I'm going to talk about today, which delivered great earnings, are all long-term holds. I'm not saying that you have to go out and buy these shares. These are the companies that I like. And if you want to align yourself with me, well, you'd be a super duper smart person, right? Okay. So let's talk about the number one stock in the stock market right now that I really love. And it has a story that you can relate to. And just as an aside, when I say it has a story, Amazon.com has at least 5 revenue streams, right? So every single quarter, the company is required to tell us what it is they've actually earned on each one of those streams. When you invest in a company that has multiple revenue streams, you're kind of hedged in a way. Because if the cloud division of Amazon, storing data, video for streaming services, by the way, Amazon is actually running some of Netflix service back in AWS Web Services. That's why you can get that video at home with no buffering, right? Because Amazon has mastered that technology. Okay, so if Amazon sees growth in its cloud services, does that make it a good long-term hold? Well, yes and no. That's only part of the story is the cloud services. If they start to see cloud service revenue growing in the US and not in Europe, is that good? Well, it depends on the growth rate in Europe. If cloud services in the US are growing 70% per quarter, but in Europe only 20%, what is the reason for that? So it's not just great revenue, it's what's the reason for that. And that means you have to read the quarterly reports, okay? And be able to decipher what's going on in each sector of the business. Now, it just so happens in almost every sector of Amazon's business, they're seeing growth. That's why they deliver the top line revenue that they did. And you're going to notice that the stock is going to continue to rise because year over year and quarter over quarter, the revenue is growing. So what am I giving you? I'm giving you one key metric to be able to look at stocks and to determine whether they're good companies or bad companies. Now, Amazon was also added to the Dow Jones Industrial Average, which means what? That there are all these index funds that have to buy Amazon shares so they can sell them to index funds, or the retail investor that does, here comes the fancy language now, the retail investor that doesn't want single stock risk exposure. You see, Wall Street has all this terminology that if you want to participate at the highest level, you have to understand. I call it the money language because I like to keep things simple, right? If you don't know how to speak the money language, then you are locked out of wealth building, okay? So if you don't like single stock risk, then buying Amazon directly may not be for you. You may want to find an index fund, S&P 500, or Dow Jones Industrial Index Fund that allows you to own all 30 stocks in the Dow Jones Industrial Average and even out your risk. The problem with that is you're going to pay a series of fees. Fees when you enter the fund, you exit the fund, and a management fee annually. Whereas if you just buy Amazon shares directly, boom, no fees. So for the person who likes to buy stock directly, they actually save money on fees, but you're willing to take the risk that the stock could go higher or lower or remain the same. Because of Amazon's new status in the Dow, I believe it's going higher and higher and higher. All right, Home Depot, another member of the Dow Jones Industrial Average in the S&P 500, announced its earnings only a couple of weeks ago. They were slightly soft on the top line, because remember, they have divisions too, slightly soft. The growth wasn't quite as robust. Why? Well, according to Home Depot, rising interest rates cause additional expenses for the consumer. Therefore, they buy just a little bit less on the home improvement side. Like I'm sure you've seen right now what's going on in the grocery store and what's going on at the gasoline pump, right? So you may pull back a little bit on where you're spending your money. Economists refer to it as discretionary funds. You may want to hold on to that a little bit, and you just kind of use your discretionary funds just a little bit less. And if you have a credit card, you know the credit card interest has gone up, so you stop spending quite as much. And so what they were saying at Home Depot is our dividend, which is phenomenal, is fine. We've just seen a little bit of slowing from the consumer because of high interest rates. Now, I just want you to know that obviously I'm giving you a very simplified version of what the company actually stated, because that's what I like to deliver to you, people who are members of the Wealthy Investor community. How can you master stock market trading? And at its basics, keep it simple. We'll talk about other forms of revenue other than top line revenue and how that relates to a company later on down the line. So Home Depot's fine. It's got a great dividend. If you buy the stock directly, there are no fees at all, because as an educated stock market investor, you understand where the revenue growth is that keeps the stock rising. And by the way, here's a little secret that I have learned being the Wealthy Investor. You ready? Most people never look at the potential for future revenue in a company. They just want to know if the stock price is going up. Now, it's great that they own the stock, but do they really have the education to keep up with the investment in the company? That is up to them, okay? You are learning how to be a sophisticated retail investor because you love listening to the show and spending time with me the same way that I love spending time with you. All right, 2 stocks that are a matter of controversy right after you take a listen to this.
Want to increase your stock market trading profits? Then you need to start your monthly membership to WITradeschool.com right now. Don't understand how to write covered calls for monthly income? No problem. Simply review Tyrone's latest stock trades in our video library as many times as you need. WITradeschool.com is all about helping you get the financial education you need to earn money in the stock market and change your financial life. Tyrone Jackson, the Wealthy Investor, has helped his students earn thousands of dollars per month trading stocks online from home. These are people just like you. So what are you waiting for? Follow Tyrone Jackson's red-hot stock trades and investment strategies today. Don't wait. Start your monthly membership at WITradeschool.com right now.
And welcome back, everybody. We're talking about stocks that have growing revenue. These next two, little controversy. You ready? Let's get right into it. Starbucks, ticker symbol SBUX. Now, I owned this stock for quite a while, but I had to sell my shares. Why? Something wasn't right. And by the way, if you own shares directly inside your trading account that you are investing in, you're not going to be right about 100% of the stocks that you own. So for example, let's say there's 6 companies that you really like. You know a little bit about the story and the revenue and you expect them to rise in the future. Guess what? Only 4 will. We always have to make room for being wrong at a company because we can't control the future. And remember, past performance does not necessarily dictate future results. We're all investing in stocks based on their past performance, hoping that the future results are greater than the past. Okay? So what happened with Starbucks this last quarter? Well, with interest rates as high as they are, people have slowly stopped paying $8 for their daily coffee and the stop at Starbucks. They're seeing a slowing in sales because the consumer is looking at gas prices and a whole host of other things. Do I really need that $8 cup of coffee every single morning? What happens if I actually make the coffee at home? Wouldn't I be saving $8? Well, yeah. What is 8 times 5 if you're a person who goes to work every single day, every week? It's an awful lot of money on Starbucks coffee. Okay, so what the company said, hey, we've seen a slowing of purchasers of our cup of coffee in the morning. That's why our top line revenue, that growth figure that looks at all divisions, has been coming down. And guess what happened to the stock price? Well, if your revenue is dropping, what's going to happen to the stock price? People are going to sell your stock. Why? This decline in revenue doesn't look good for the future, right? So they will take profits or take a loss and move on and reinvest or redeploy that capital into another stock that is rising, that looks better for the future. This is called rotation. Investors who are sophisticated will sell off one investment. Investors who are sophisticated on the investing side frequently sell off their losers and add to their winners. And that is a great investing formula if your goal is to, let's say, get to $1 million or more in stock market assets. You have to know that sometimes you just sell off some shares, right? Now, when you're selling off shares, the first thing you want to try to do is rotate into a company that has rising revenue that also pays a dividend, right? Because that dividend, as well as the stock rising, is what allows you to make up for the loss on a loser and continue to move on towards wealth. If you're in the stock market and you never expect to have a loser, guess what? That's kind of like a form of self-sabotage and unrealistic expectations. We're all going to have losers. However, if 80% of your portfolio rises and 20% doesn't, you could still be a millionaire in a 2 to 5 year period. Just pick well. Which brings us to the mother of all discussions, and that is Apple Inc. Now, Apple's last revenue report was good. All of the money in almost every division was up, except they didn't make any new products. They just raised the prices of their existing product line. What does that mean? iPhones, Mac, goggles, wearables, right? They just went up on the price. Now, the reason that the educated investor has a problem with that is because in the field of technology, you're supposed to have something called a pipeline. Like, what's the next big thing? What's the next big thing to come that will drive your quarterly revenues higher? And if you don't have anything in the pipeline, or let's put it this way, you don't tell us as members of the public about what you have brewing in that pipeline, confidence, or as we say on Wall Street, sentiment will decline and your shares will either go nowhere or start to sell off. Technology is a highly, highly competitive business, and it's all about tomorrow. So what the company did was they offered a 110 billion share buyback, which means that they're going to reduce the float that's out there, right? And increase the dividend. Well, when the company starts a share buyback, they're pulling those shares off the market. They're holding on to them. They increase the dividend. So who's the largest recipient of the quarterly dividend? They are. Now, some people say, well, that means that good news is coming. I don't know about that. If it is, they haven't effectively communicated that to the public. I think the 110 billion share buyback was to kind of throw us off the scent of future revenues declining. Now, only in time will we'll see if I'm correct about that, but I think that that's really the play here. So I cannot recommend Apple anymore as a long-term hold. I think there are other people on Wall Street who share the same sentiment that I do. I'm not saying they're a bad company. I just don't see any future revenue growth. Now, I have loved Apple for a long time. I'd love to be wrong about future revenue growth, but I don't see anything in the pipeline. They're a publicly traded company, and they're supposed to talk to us about it. All right. So these are the kind of issues that you need to know if you're going to be wealth building in the stock market, not just in the market for fast money trades. It's fascinating, right? It's like a puzzle where you get to choose all of the pieces, the stocks that you own, and you develop reasoning for why you like one investment over another. The goal here on the Trading Stocks Made Easy podcast is to educate you so that you can make those kinds of multi-million-dollar decisions that show up in your portfolio. What I love to do for you is simplify Wall Street, introduce you to some terminology so that you can make smart, educated decisions about your money. Trading and investing is not difficult at all. You just need someone who you like, know, and trust to walk you through the process as often as possible. That's why I created WI Trade School. It's like Netflix for stock market traders. You can go in there and see recommendations. It's all videos. You can see recommendations for the last 10 years, where I've been right and where I've been wrong. And everybody who has a Trade School membership ultimately says to me, thank you for educating me about the stock market. Now I can make smarter, better choices for my retirement, for my cash account, for my family's future, and now I have comfort. Well, my saying back to them is, you are welcome, but it's up to you to take that step and start your Trade School membership. Now, I do have some courses that are about to come up, and we offer courses now after an earnings period so we can separate the good dates, as we call them, from the bad dates. You ever stay in a relationship too long that's just not working because maybe it's comfortable or you just don't want to leave or he or she is really good looking? Yeah, don't do that. Know when it's time to move on with your money in the stock market. Hey. You know, I've done it too. Come on, let's just be real. All right. So join me at thewealthyinvestor.net if you want to download my latest ebook, which talks all about covered call writing, and you get to see some of the stocks I really like. I've been around for a long time, and I've helped an awful lot of people just like you do really, really well. So I'll see you at thewealthyinvestor.net. This is Tyrone Jackson, the Wealthy Investor, saying thank you for spending some time with me. Stay open, stay positive. The best of your life financially is really on its way to you, as long as you learn the Wealthy Investor approach. I'll see you right here on the next Trading Stocks Made Easy.
You've been listening to the Trading Stocks Made Easy podcast. Be sure to rate and review our show on iTunes. While you're on iTunes, be sure to click the subscribe button and you'll automatically receive our next episode.